What's
Mhm.
going on, guys? This is Aaron from Departures Capital, and we're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining sector. We've chatted many times, John. It's a pleasure to have you back on in such an exciting time for gold and silver and many other commodities. How are you doing today?
Doing great, Aaron. Thanks for having me back.
Yeah, exactly. So last time we spoke, we were discussing the technicals when it comes to gold. It was holding 1900 for a long time. And you were saying that once something bases like this for an extended period of time, it usually moves up. It's hard to believe
Right.
now that we're at 2400. It felt like it took so long to crack 2000, but I'm super happy to see it. Where do you see it going from here?
Yeah, we did say that all of last year on your show and multiple appearances. It held 1900 on a closing basis for over 5 months, which was extremely bullish in my opinion. Then we broke to new time, new all-time highs, obviously, this year. What's interesting are two things. One is we haven't retraced to test that ever again since then, which is extremely
Mhm.
bullish, like we are in silver right now, which we'll get to. And secondly, that 22, 75 to 2400 range has really been a tight range that the gold price is trading in, right? So like this has happened now for months as well. So what that means to investors, right? Because that's really what we're about here is trying to help your listeners is like look at Agnico's earnings, AEM last week. Phenomenal free cash flow. Um, Imagine with a 1200 ASIC, AI, all-in sustaining cost at 2400 gold, it's literally double. Like I mean, it's like the margins these companies are going to start making here in quarters to come, uh, just going to be fantastic. So I wouldn't if you're owning Newmont or Barrick or Agnico here, I wouldn't give up. I mean, this is the time you hold and you buy on dips, right? Because you will get dips. This sector is volatile. Um, but Newmont out there at 47 today with like a dividend. I mean, yeah, their ASIC is higher at 1550 ish, right? But these companies are going to print money as we move forward. So, I'm excited about gold's run, but I'm more excited about gold equities, and that means not just producers like we just talked about that it can be found in the ETF like GDX, but also the developers and the explorers because there's just going to be a lot of upside when gold breaks out to a higher level because then people will be like, okay, this is higher than I ever anticipated gold being at for this year, including myself. We had a $2,500 price target, as we've talked about before. And as you can see, that's been resistance here. Um, but, in this kind of a world where we've seen so many crazy things just happen in my country here since we last talked,
Hmm.
I don't see where 2,500 is like far fetched for an extended period of time, and we're seeing that play out right now between 23 and 2,400.
I also think that people are, finally waking up to the fact that fiat currencies are not looking like a great store of value internationally, not just like the West, because the West has always been aware, there's always been chatter, but I feel like it's finally trickling down to even your standard retail investor. So we'll see what happens, but definitely a good time for gold. So now let's talk about rates. Last time we spoke, rate cuts were barely in the picture. And it's amazing how much changes since we last spoke, and it's only been like a month or two, right? So now
Yep.
there's a high chance of a 50 basis point cut, which last time we spoke was completely out of the cards. So tell me your thoughts
Yeah.
on this and rates.
Yeah, that probability of a 50 basis point cut September 18th has gone from 5% the last time we talked, probably 2 months ago, to 55% now. So the market is betting on a half point cut September 18th. You can see what happened in the volatility since the open August 5th, right? I mean, we're recording this a little after that. But Japan being down 12+% in one day, that is something you need to be paying attention to if you're an investor. This is not an emerging market. This is Japan, people. The Nikkei is a real index. Like this isn't some small little place in the middle of nowhere, right? So that really scared me. Like it should scare investors. You should take this stuff seriously. And guess what's happened? Snapback rally. I'm wrong, right? Like, but I'm not going to be wrong long term. This is typical in a rally in a bull market. You see snapback rallies. But
Mhm.
why did we see the destruction in the first place? Let's look under the hood. It's all about the US data we saw August 2nd. We talk about non farm payrolls a lot on your show, and we talk about unemployment. And what we've been saying is non-farm payrolls, when they start to turn over, that's a warning sign. Well, guess what? They missed on Friday. The number was around 114,000 new jobs created versus 175K on the estimate. That's not good for the economy. Number two, the unemployment rate went up from 4.1% to 4.3% and took people by surprise there. And we were saying to our subscribers, if it gets to 4.3 or 4.4, you're going to see a reaction. Now, I didn't expect the kind of reaction we saw from Japan over the weekend, but that tells you how elevated some of these markets are, Aaron. I mean, we've just had a beautiful run here, and we
Mhm.
were literally writing in our newsletter 3 times now since May. Hey, if you've made a lot of money in the broad market internationally or domestically since March of '09, you need to start, having a meeting with your financial advisor and developing an exit plan from some of these long dated positions you've held, because not everything goes up forever. I mean, it's been a 15-year plus run. So you have to be, somewhat humble about it and say, hey, I'm going to take some gains here and move on.
Definitely. So when it comes to individual companies, what are some of the names you're looking at right now?
We're always looking across the entire commodity spectrum, so it's a lot of work. I think one area that looks ridiculous to me, that also has long term, upside, is nickel and PGMs. If you look at North American nickel, for example, there's a real problem out there. Everyone in the industry knows this, that Indonesia is just dominating in terms of market share, and it's not a very stable part of the world, right? Like, I mean, we're not talking like a 20%, production number. We're talking like the last I looked, 68 to 72% of world production was in one country. I mean, what does that do to nickel prices if we have any disruption in Indonesia? Number two, you have to look at why nickel prices were down 40+% last year. I don't think it's because nickel is like, no longer in vogue. It's needed, right, in global economies. The reason, in my view, is that the Russian war effort is being funded by selling things, right? And nickel is one of them. They're a huge producer of nickel. And so that puts pressure on the price in 2023 and into 2024. Does that mean that Russia's always going to be at war? Of course not. And when that war effort stops and we see some type of, you know, um, what's the word, a truce, if you will, like just some understanding, I think that might happen next year, then nickel prices are going to go up a lot, I think. And that's why we're buying nickel juniors right now that have been thrown out the window. I mean, I talked on your show about power nickel,
Mhm.
PNPN in Canada, PNPNF in the States. Terry's a great leader. He has a website called SaveCanadianMining.com that talks about the short selling and the down ticking in our sector and how regulators just look the other way, uh, for lack of a better word, in many instances, even involving his own company. And I can tell you, I've watched the stock very closely on level two quotes. He was right. I mean, he was getting swarmed. But guess what? In April, he had some positive news that was followed by more positive news. And as a nickel company, was then making some hits on copper that really surprised the market. And these were not like normal copper hits; these were massive hits in our opinion. So the stock really responded. It went up, a couple 100% based on that. And that's why so many investors are in our sector, right? We want that big upside. And that stock is delivering and is now cashing up. Like, good for them, right? Like, more companies should take that lead, right? Like Alexco probably could still be in business if they raised enough money at high prices, right? And they didn't, and they sold the Hecla for pennies on the dollar. So you need to take financings when you can get them. And Terry, to his credit, did that. Um, so we still like that stock. We really like Stillwater as well, which we've talked about at higher prices on your show. We've been wrong on the entry point on that. We continue to buy on dips because we always check our thesis, Aaron, with the CEO. We don't call IR necessarily. We want to hear it directly from the leader of the company as to what's their opinion for the share price decline, right? And Mike at PGE in Canada, PGEZF in the States, has basically said, look, we're attached to a major in Montana. We have a 15%, JV with Glencore already. Glencore is I think the third largest commodity player in the world, right? So if it's not Sibanye, that ends up buying them, it's probably going to be Glencore, right? And so as an investor, when you're looking at the stock at 7.00, sorry, 0.077 US, which is probably about 10 Canadian, it's just like what's happening here? Like this is a real company. They put up great results. They're cashed up. They don't need to do a raise. So we're just like, why not buy something like that, right? It's amazing to me. So when you ask the question what we're buying, we're bottom feeding, for lack of a better word, on stuff like that. We're looking at stuff like Forum Energy, which we've talked about on your program before. Last year, I said on your show in August, I remember I said this thing is like insanely cheap at 4 cents US, and it went all the way up to 15 and a half 2 months later, on good drill results, right? Right now, it's trading at 5.5. It's literally retraced all of that gain, unfortunately. Um, and look, they're drilling right now in the Thelon Basin. This is the time you buy stocks when no one wants them in August and December. I've said this many, many times. It's part of the reason we have such a good track record is we're buying when everyone else is on summer vacation or Christmas vacation. So it hurts my social life, but it is it is something you got to do as an investor. You got to pay your dues and be at the computer and put the time in.
Great strategy. Fully agree with that. So over the past few years, we've covered gold, silver, uranium, various other commodities. Now let's chat about copper today. What are your thoughts on copper?
Sure, man. Copper was supposed to do so well last year, right? And it did
Mhm.
nothing. And in fact, it was like flat for the year, slightly down. Um, that was despite Goldman Sachs and Morgan Stanley and a bunch of huge shops saying, by the end of 2025, we see copper at XYZ a metric ton. And the price is like 80 to 90% higher than it was last summer, right? So we got really interested in copper when you're seeing big shops like that come out and put their neck on the line. They don't have to do that. I mean,
Mhm.
but they made a salient case for why that would happen. And we think, like them, that this is not just about China anymore. This is a structural deficit in the copper market. And when I talk to traders on the exchange, they relatively always say, like, we have a shortage of copper, right? It's like, so we all agree that this is not just a China story, at least, the institutions think the same. Um, it's about the electrification of the world. Copper's a needed element. It's not going away, right? So we look at that and say, okay, copper, broke through that $4 per pound magic number, rallied up this year. If you look at charts back in April, May, and it's faded again. It's below four as I looked, just this week, and it's frustrating, right, to see something go from four to almost five and then back to four or something like that, right? You're like, oh, this I thought we were off to the races, but we're not, And so what as an investor do you do about that? You go back, talk to the CEO, just like I said with Stillwater, and you check your thesis, right? Because things can change. So you want to just say, look, if I bought this thing on the way up at a higher price, you should be buying more here at a lower price. Like if you still have conviction in the thesis, right? So a couple of those names, like Surge Copper comes to mind, SRGXF. They have an RSI right now of about 40. Just again, for your listeners, that means relative strength index. And when you get closer to 30, it's usually a buy, and that's what we look for as value managers is try to buy cheaply. And so Surge right now is at 0.099 US. It's literally at a low as I'm recording this, but the price a few months ago when copper was rallying was 17 and a half US. So are we saying this is going to go from, let's call it 10 rounding up to 17 and a half? That would imply a 75% gain. I'm not saying that. I'm saying like it's going up from here in our view, and it's going to retrace some of those losses, right? That's just a normal chart pattern. Is like if the company did so well in a hotter copper market, as copper prices improve, the stock should improve. And
Mhm.
Leaf is a really good leader. If you look at their news, they're drilling Berg right now. They're coming out with a PFS in the future. There's catalysts there in our view. Obviously, investors love drill results, and they're going to deliver those. Another one that we just started to follow is Alta Copper, ATCUF. Had to check the ticker on that one. I just started tracking this, but the reason I got involved with that is Julio Bonifacio. Julio is the former chairman of Copperbank, which is now Faraday. And I found Faraday on my own in 2000, and it's one of my biggest copper successes ever. I found the stock at 13 and a half US. That was our first entry point. We bought it all the way to 28 and then just held. And we disposed of most of it between 60 and 70 US. Like seriously, like 16 months later. It was an amazing run. And Julio says, "Hey, I remember you from that. I didn't have too much interaction with him back then, but he said, you were always on shows like this talking about our stock, and this one's really cheap too, and here's why." So basically, they have a huge position owned by Fortescue, and they think that eventually they're going to sell to someone. And again, when you start doing the logic here, Aaron, it's like the same thing with Stillwater. If they have a 15% ownership by Glencore, why would they sell to ABC Mining? I mean,
Mhm.
Glencore is already, saying, "Hey, we're really interested. We're really interested." So I think that's one of the things that investors miss, is that someone like Alta could probably sell tomorrow for a 20 or 30% gain, right? But Julio sees the upside in copper. Why would he do that? It's the same thing with Mike at Stillwater. He's not selling for pennies on the dollar. He's a big shareholder too, right? That's another thing you have to look for as an investor. You have to see, does this CEO or the board own a position, right? Because if they don't, they could sell. And that's what you have to be careful about. But people that have skin in the game, like Julio, they're not selling at these prices. So I think that's one that's mispriced. They have about 90 million shares out, fully diluted, about 80 otherwise. So good share structure. And he recently just announced that he's moving from chair to CEO interim. So, I think that's one to take a peek at. Lastly, I could have mentioned this earlier on the nickel side, but this is kind of a polymetallic deposit. So Denarius Metals, DNRSF, is something that's new for us as well. I spoke to their CEO, Serafino, not long ago, and they're in Spain and Colombia. I've spent a lot of time in Spain just vacationing over the years. It's such a good jurisdiction. Like, I don't see any issues with Spain, and neither does he. Colombia is a bit more challenging, but you can see a name like Eris, right, is fine. They're operating in as a producer in Colombia. So that stock is announced a $10 million placement. So there's going to be a little pressure on the shares here right now, but that's when you buy. If you're a retail investor and you can't afford to do the private placement, buy it cheap, right? I mean, that's the whole idea with these stocks, is when they have to raise, there's going to be some dilution, and that's when you take advantage of that opportunity. But that $10 million is going to cash them up all year, and I think you're going to see some good things from them.
Exciting times ahead. Well, I look forward to having you back on in September. We are going to be chatting at a very special time. I believe that's right when the potential Fed announcement is coming. So we'll see what
Yeah.
happens. Always a pleasure, John, and we'll have you back on soon.
Hey, do you mind if I just mention one thing? We're doing a conference in October at the Four Seasons, Fort Lauderdale, Florida, and it's going to be October 20th through 22nd. It's the first full mining conference that I'm involved with. I've been in the background for many of these conferences, but I'm really excited to host this with my partners, and we're going to have 35 mining companies there from across the entire commodities spectrum. So it's not just going to be a gold and silver focus. We'll have copper companies there, uranium companies, et cetera. And I think it's going to be fantastic. So if you're an investor and you're in the Southeast, we'd love to see you there. The website is topshelf-partners.com, and you can get more info there. We'll put it in the show notes.